Hello traders, and welcome back to our Babypips course. For today we are still on summer school course 5 of 11, and we have discussed Fibonacci, Elliott wave theory, and now we're about to consider harmonic price patterns, and it has subheadings, and one of them is the harmonic price patterns in the forex market. Second one is the ABCD and the trade drive. The third one is the Gartley pattern, the 3 steps to trading harmonic price patterns, and summary harmonic price patterns. And so let us just go quickly take a look at the subtopics of 5.3, and then let's dive into this. But before we actually study, let's just roll the intro. So here we are in harmonic price patterns in the forex market. So having learned a little bit of other forex trading patterns we have been learning for a while now, we still want to learn more, and the other technical analysis tool we want to learn is how to trade with harmonic price patterns. Okay, so you have to add that to your trading arsenal. Don't scream, okay? Don't scream like this people. You're like, what? I still have to learn more. Yes, you continue to learn until you have a mastery over yourself in the forex market. Okay, so basically the harmonic price patterns it only enables people to spot possible retracement areas in the market, especially when there has been a recent trend. Okay, so you are also going to use the Fibonacci retracement tools and the Fibonacci extensions to be able to determine where the price of the market will either extend to or retrace to. Okay, so a combination of both the Fib tools and the harmonic patterns will be able to help you have a firm grasp of whatever you're doing in the forex market. By so doing, we will be able to distinguish possible areas for a continuation of the overall trend. And in this lesson, I'm going to discuss the following harmonic patterns. First in the list is the ABCD pattern, the 3 drive pattern, the Gartley pattern, the crab pattern, the bat pattern, and the butterfly pattern. Okay, all these are types of harmonic patterns that we are going to consider. So you don't have to worry. Once you know 1 or 2 of it, the rest will be very, very simple for you to follow. It will be like as easy as 1, 2, 3. So we are going to begin with the ABCD pattern, and then the 3 drive patterns, and then the Gartley pattern before we move on to the other animals like bats, butterfly, and what have you. Okay, so after learning all these tools, we'll take a look at the tools you need in order to trade these patterns successfully in the forex market. For all these harmonic price patterns, the point is to wait for the entire pattern to complete before taking any short or long-term trades. Okay, so let's move now to the next lesson, the ABCD and the trade drive pattern. So here we are, the ABCD pattern. The ABC pattern is the most simplest of all patterns, and we are going to use it in conjunction with the Fibonacci chart tool. But to be able to spot the ABC pattern, you must have an ultra sharp hawk eyes, okay, to be able to spot these patterns in the market. And for both the bullish and the bearish versions of the ABC chart pattern, the lines AB and CD are known as the legs between the legs, while BC is called the correction or the retracement. So if you use the Fibonacci retracement tool on leg A, B, the BC should reach level 618 of the Fib tool, which is the retracement. And then for you to get the extension of CD, you have to draw your Fib tool from your B point to your C point to give you the extension of D. Okay, and to draw the retracement of D, you have to draw from point D down to point C. And so that is exactly how you'll be able to have the correction and the retracement extensions levels. So for the trade drive pattern is like the ABCD pattern. It has 3 legs and 2 corrections, and so the 3 legs is the impulse and the drives is the corrections. Okay, so in total it makes it 5, and it is also with the Fibonacci tool that will be able to trade this trade drive pattern. Apart from the Fibonacci tool, you also have to be very patient to make sure you are waiting for the pattern to complete before executing your trades, either long or short. So look at it very well. So this is the first impulse, this is the retracement. We will fall down to the retracement level of 0.618. okay, so that is that. So this is 1, this is 2, this is 3, here is 4, and this is drive B, which is the retracement. Now let's move on and see what we can learn further here. As you can see, the charts from point A should be 61.8 retracement of drive 1. okay, then similarly point B should be the 0.618 retracement of drive 2. Now the second drive should be the 1.272 extension of correction A, and drive 3 1.272 extension of correction B. I don't know if you really understand what we just read. Okay, so I felt we should really understand how to draw the retracement and the extension levels very well, how to use the Fibonacci tool very well. Okay, so let's use this as the extension. Okay, and then let's use this as the retracement. Okay, arrow. So how do you get the extension and the retracement levels? If you want to get this movement from the top, right, from this peak to retrace down to about 50% level, that is what the market always does anyway. If it's in a bullish market, higher high, higher low, higher high, higher low, right, like that. So so to get this right, once this move has taken place, this impulse, the price has traded from here to this here, and it's turning down, like at the peak where you have a single candle like this, okay, and you have another bearish candle to the downside, it is now going down. Okay, to know how far it will push, it will retrace, all you have to do is simply take your Fibonacci from the bottom here down to the top. It's as simple as that. Draw it from the bottom, like here at the very wicks. Okay, so let's say you have a candle to the downside like this with a strong wick to the top or the bottom. Okay, so draw it from this wick here all the way to the top here of this wick. Okay, and it will give you this retracement which you want. Do you understand that? It's as simple as that. Draw it from this wick at the bottom side to the top of this wick. It will give you this retracement here. Now, since it's in the bullish trend, right, trend to the top side, for us to find out this movement again, we do not know. It hasn't started already. We do not know. It is still here, but we want to know how far it will push to the top side. Now, for us to know it is going to push to the top side, we have to see some rejection wicks here. Okay, like a very small candle, huge wick to the top, huge wick to the downside, or maybe a very bearish candle like this with no body. Okay, and maybe we now have just another candle to the top side, bullish candle like this. We know the market is about to continue its push to the top side. Okay, so for us to know how far this extension will continue to the top side, even though it hasn't happened, what you should do is take your Fibonacci tool, okay, and draw it from this low, this wicks here. Okay, place it at this wicks here and draw it to the top of this wicks, and it will come out with all these levels to the top side to tell you how far it is going to extend. So this is how you are to draw your levels as well. Okay, to have this retracement, to know it, draw your Fibonacci from this point to this point. Okay, and to give you the retracement, and we are learning here that it should be able to retrace to 0.618. So once this retracement has formed, okay, and you have seen it, to get this extension to the top side, okay, what you are to do is to take your Fibonacci from here, right, from here, I need a very good color, from this bottom here to this top, from A to 1, it will give you this extension, and what we are learning is that it should extend to 1.272, okay, here. And to get the retracement again, you know what to do. Take your Fibonacci. Once this extension has occurred, take your Fibonacci from here to this top, from A to 2. It will give you the retracement. Now once the retracement has formed, to get the extension, okay, what you have to do is to take your Fibonacci from this point to this point. It will give you this extension. So that is basically how you are to draw your Fibonacci in a trending market, a bullish market. Okay, now in a bearish market, all right, like this, how to draw your Fibonacci. Once you have this high, okay, to this low, to get this extension, same thing applies. Okay, so this is a bearish market, up, so higher, lower high, lower low, lower high, lower low, lower high, lower low. Now for you to get the retracement, okay, say you want to find out this movement, this retracement from here to this point, what you have to do is take the previous, okay, low before this one formed, like this movement, this previous movement. Okay, so you have to draw your Fibonacci from this point to this point, and it will give you this movement. Now once this movement has formed, to get this retracement, what you have to do is draw your Fib from here to the top. It will give you the retracement, okay, to about 618. Now once 618 has formed, right, to get this impulse to the downside, what you should do is take your Fibonacci from these levels and draw it to this level here. I need to pull the extensions for you down here. Now once this leg has formed and it is reversing, for you to get this retracement, again the same principle applies. You draw your Fibonacci from give me colors. Draw your Fibonacci from this low to this high. It will give you this extension, this retracement. Okay, to get this extension again, draw your Fibonacci from this high to this low. It will give you just like that, back and forth, back and forth. I am taking my time to explain it so that you really understand. So let's continue. Okay, know how to move your Fibonacci retracement level. Just know that we'll do a course on that alone, how to configure the data that you are to impute in the Fibonacci retracement levels. Okay, once you do that, you'll be able to get and be able to know how far the price will extend or retrace. Typically when the price reaches point B, you can already set your short or long orders at the 1.272 extension so that you won't miss out. Okay, so let's look at the diagram here. Once price reach point B, you can set your long order. So you can take a trade here, place a trade here, so that by the time it's moving up, start filling you in. Okay, it will take practice. Okay, we are just learning all this, how they move, how they work, but it will take you practice and practice and practice. Okay, the next lesson we'll have is trading the Gartley pattern. So let's move on to the next lesson. So as you might already be thinking, the word Gartley or Gartley pattern, in fact Gartley is the name of somebody, the man who invented the harmonic patterns. Okay, his name is Harold McKinley Gartley. In the years between 1930s, he attended a seminar, a phenomenal seminar, whereby scientific and statistical methods were applied in analyzing the market behavior. And soon after that, Gartley came out with his own discovery, and according to him, he was able to finally solve the problems traders usually have, that is, when to enter the market, when to buy, and what to buy. And soon thereafter, after Gartley came out with his ideas, many people expanded on Gartley's theories, okay, and that is what usually happens. Just like Elliott wave, today many people have expanded and elaborated on Elliott wave, and all that. And so many books, trading softwares, and other people, individuals, came up and also expanded the Gartley pattern, and that is why we have the names of those other animals we talked about initially. So let's begin with Gartley, aka 222 pattern. What is the 222 pattern? So the Gartley, aka 222 pattern, is found in page 222 of Gartley's book, titled H.M. Gartley's book, Profits in the Stock Market. I think you should do a research on Google and try and find this book if you really want to understand the harmonic patterns in detail. Okay, they are all ABCD patterns. However, they have a point of beginning. Now that point of beginning, as you can see in the picture, is titled or labeled X. Okay, that's the point of beginning, and from X down to where A began, this is a topped out market. Okay, the price is about to reverse to change trend. Trend is about to reverse to the top side. Okay, so understand these basics. Okay, now let's look at the data and the figures that is imputed in between. Okay, so what makes the Gartley such a nice setup when it forms is that the reversal points are Fibonacci retracement and Fibonacci extension level. Where they are going to reverse once they are forming, those areas there are Fibonacci retracement and Fibonacci extension level. That is to say, they line up very well with the Fib retracement levels or the Fib extension levels. I hope you get that very correctly. Okay, they line up very well with this and with this, and this gives a stronger indication that the pair will actually reverse. Now the pattern can be very, very difficult to identify, okay, but if you are just careful enough, okay, to follow the pattern one after the other, right, taking note of the cardinal points, okay, or the characteristics you have to follow, you'll be able to get phenomenal results. Okay, so let's look at the characteristics of a perfect Gartley pattern as we have seen in the diagram above, this diagram here. Okay, number one, move AB should be the 0.618 retracement of move XA. Do you understand that? Move AB should be the 0.618 retracement of move XA. From move XA to get AB, you will draw from here in your Fibonacci level down to the top, and you will have price stalling at this level here. So let's say another characteristic, move BC should be either 0.382 or 0.886 retracement of move AB. If the retracement of move BC is 0.382 of move AB, then CD should be 1.272 of move BC. Consequently, if move BC is 0.886 of move AB, then CD should extend 1.618 of move BC. Move CD should be 0.786 retracement of move XA. This is the whole explanation. Now, like what you have just seen, we have read, right? It will take time to actually sink this in. We have read it quickly, right? And we keep scrolling back and forth. What you should do is to write this down, right? Like a notebook or something, and then try to be practicing on the charts. Okay, now let's move on to the next one, the Gartley mutants, the animals. So after Gartley came up with his ABCD pattern, many people developed more on Gartley's theory of the harmonic price patterns, and people came up with different names. Okay, maybe they belong to better, I don't know, the crab. And now here is the crab pattern. Here this is the XABCD. Okay, and this is the point to sell. This is for the bearish pattern. This is the bullish pattern, XABCD, and then this is the point to buy. Okay, and the person who invented or who theoried the crab pattern was Scott Gartley in the year 2000, and he said he is a strong believer that the harmonic patterns, they actually work very well. And harmonic pattern, according to him, the crab pattern has a high risk to reward potential, potentials, because you can put a very tight stop loss. However, the crab pattern have the following characteristics you must look out for. Move AB should be the 0.382 or 0.618 retracement of move XA. Move BC can be either 0.382 or 0.886 retracement of move AB. If the retracement of move BC is 382 of move AB, then CD should be 2.24 of move BC. Consequently, if move BC is 0.886 of move AB, then CD should be 3.618 extension of move BC. CD should be 1.618 extension of move XA. So those are the characteristics, the things you must look for, the guidelines you must look for whenever you want to trade the crab pattern. Next, we have the bat. So here we are, the bat pattern. The bat pattern was also discovered by Scott Gartley in 2001, and it's defined by the 0.886 retracement of move XA as potential reversal zone. The bat pattern has the following qualities. Move AB should be the 0.382 or 0.500 retracement of move XA. Move BC can be either 0.382 or 0.886 retracement of move AB. If the retracement of move BC is 0.382 of move AB, then CD should be 1.618 extension of move BC. Consequently, if move BC is 0.886 of move AB, then CD should be 2.618 extension of move BC. CD should be 0.886 retracement of move XA. Okay, I think I understand that, but I don't know for you. I think we also have to come back to this to really study it and also possibly print them out, right? These pages, print them out, and please go and look for this book, okay? Scott Gartley's book, or that of Gartley's. I think Scott Gartley is the one whose our patterns we are learning. Ultimately, you can download that of Gartley. You can also download that of Gartley and be studying them side by side. Then the butterfly pattern. The butterfly pattern was, invented by Bryce Gilmore. Bryce Gilmore, that's his name. He's the one who theoried the butterfly pattern, and is defined by the 0.786 retracement of move AB with respect to move XA. And the characteristics includes: 1, move AB should be the 0.786 retracement of move XA. Then 2, move BC can be either 0.382 or 0.886 retracement of move AB. If the retracement of move BC is 382 of move AB, then CD should be 1.618 extension of move BC. Consequently, if move BC is 0.886 of move AB, then CD should extend 2.618 of move BC. CD should be 1.27 or 1.618 extension of move XA. All these figures, the characteristics, they are very, very important. Okay, and for us who are just learning about the Gartley of harmonic price patterns, it will take time for us to really understand. Okay, so friends, this is how we come to the end of this lesson, and let's move on to the next lesson that talks about the 3 steps to trading harmonic price pattern. So here we are, 3 steps to trading harmonic price patterns, and from what we have learned so far, you have already known that to be able to trade harmonic price patterns, you should be able to have a very good eagle eye, right, to spot those perfect patterns and buying or selling on those patterns upon their completions. So here are 3 basic steps in spotting harmonic price pattern. Step 1 is to locate a potential harmonic price pattern. Step 2 is to measure the potential harmonic price pattern, okay, using the Fibonacci retracement or extension levels. Then step 3 is to buy or sell on the completion of the harmonic patterns. If you follow these steps closely, right, if we follow it closely, we will be able to profit maximally while trading the harmonic price pattern. So let's look at an example here. We just have A, B, C, and D. This can be the bat pattern, it can be the crab, it can be whatever it is. Okay, then it is only when we start to measure that it now starts making sense. So if we say this is point A to point B here, right, and we draw our Fibonacci retracement levels from the starting point A to starting point B, and we see that this is the price got to almost here, 50% of this push to the downside, and in our Fibonacci retracement tool it will show us 0.618. It now starts to make sense. Okay, so move BC is 0.618 retracement of move AB, right? Then move CD, right, C and D is the extension of move BC. So from here to here, how long will it extend? This is the extension of move BC, okay, from this point to this point, and the length of AB is roughly equal to the length of CD. Those characteristics, those cardinal points, we must remember them. Okay, and this pattern qualifies for a bullish ABCD pattern, which is a very strong buy signal. Now step 3, buy or sell the completion of the harmonic pattern. So once the pattern is completed and you've done all your homework, you've done all your fib tools, you've labeled everything and it's very clear in your eye, what you have to do is either to buy or sell the pattern. Now in this case you should buy, because at point D, which is the 1.272 Fibonacci extension level right here, right, you have to put your entry here and put your stop loss to load the wicks of that move D, and from there price will eventually rally up, as we have seen in the example that we have on Babypips. The price eventually rallied up. Now the problem you're going to encounter is that with harmonic price patterns is that they're not perfect and they are very difficult to spot, so you have to be kind on yourself. So more than knowing the steps, you need to have a hawk eye to spot potential harmonic price patterns, and a lot of patience to avoid jumping the gun and entering before the pattern is completed. So it's a lot of work, like I have been saying, it's a lot of work, my friends. So take your time, please. Okay, download the books of Gartley to study. We are the summary of harmonic price patterns. So let's summarize what we have been learning so far. We have 6 harmonic price patterns. The first one is the ABCD pattern, the 3 drive pattern, the Gartley pattern, the crab pattern, the bat pattern, and the butterfly pattern. There are 3-step price pattern recognition process. 3 steps to recognize the harmonic price pattern. The very first step is to locate a potential harmonic price pattern. The second step is to measure the potential harmonic price pattern using your Fibonacci retracement and extension levels, and the third step is to buy or sell the completion of the harmonic price pattern. Again, harmonic price patterns are so are so perfect that they are very difficult to spot. So more than knowing the steps, you need to have hawk-like eyes to spot potential harmonic price patterns and a lot of patience to avoid jumping the gun and entering before the pattern is completed. So with that, we are rounding up our course 5 summer school. So this will be the end of course 5. Congratulations. And then please do your research, okay? Study more, practice and practice and practice, okay? And do not give up. No matter how much you lose, don't give up, right? There's a lot of potentials in the forex market. It will take you time to understand yourself, to understand your timing, to understand the time frames, from higher time frames to the lower time frames, to understand key levels, to understand patterns, if patterns is what you want to trade, if harmonic pattern earlier to it will take a lot of time, dedication and homework, and lots of mistakes. I can promise you that you make lots of mistakes. But the way it becomes interesting is that those mistakes helps you to wash your back in the long run, because you now know that you've made these mistakes before. You don't want to repeat them again. So mistakes are actually beautiful in helping us to grow, to know where we are failing and where we need to improve and where we need to strike hard. So when it comes to forex market, right, it is not the easiest business at all in the world. I mean, well, if a trader said forex market is the simplest way to make the most difficult of all monies, okay, sorry, is the difficult way to make the quickest of money. Yeah, it is very quick to make money in forex, but it is very difficult. So my friends, just a word of encouragement: don't give up, okay? Don't give up. And so with that, I want to encourage you to share this video, okay? Smash the like button if you haven't. Subscribe for more content if this is your first time of coming to the channel. And if you have any question, please feel free to drop it in the link, in the comment section below, okay? Ask any question you want to ask. You can show your appreciation or whatever thing you want us to do, right? Please just drop your comment below and I'll respond as soon as possible. So with that, I wish you success in your trading career. Please smash the like button, turn on notifications, okay? And until next time, I wish you success.